You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Gold has got a few years to go. I'm not saying it's not going to be volatile in the interim. I'm actually hoping it is, because then there's more of an opportunity to pick up these stocks that I like at a better price.
Welcome back to Mining Stock Education. I am your host, Bill Powers. Thank you for tuning in. If you would like to engage the show, as always, you can feel free to email me at bill@MiningStockEducation.com. Well, I hope your portfolios are performing well, as is mine this week, with gold and silver in particular really rising. It's nice to see a lot of green, double-digit green in my account every day. And on today's show, we're going to be hearing from a resource investing expert, newsletter writer Joe Mazumdar from Exploration Insights. If you're not familiar with Joe's work, go on over to explorationinsights.com. Joe, thanks for coming on Mining Stock Education again. And I'd like to start off with getting your commentary and sharing with us what is the significance of all of these in the last couple weeks. We've seen these bought deals or financing announced, and then they're immediately upsized, some of them by 50% or more. What does this mean? Are the generalists coming in, or is this smart institutional money?
Yes. Yeah. Thanks, Bill. Thanks for having me. Yeah. So I have been tallying year to date equity financings on the Canadian markets, and I tallied about 240 transactions that raised over $2 billion Canadian in 2020 year to date, and mainly linked 75 to 80% all precious metals. Average deal size was 9 million, which is good. But what we saw was there was a momentum coming in early January to about PDAC. When gold was breaking through 1,600. And then we saw a gap between around PDAC to about April, where we didn't see a lot of financings. And then post, let's say about mid-April in that, we saw another significant rise as gold started breaking up over 1,700. And so you could see that, you could almost map that with the cumulative financings. And what I've noticed is that even development companies that were, like you were talking about, getting upsized and bought deals, some of the ones that I noticed that were doing really well were the advanced development plays in precious metals. Like we had Mag Silver, we had Bluestone, we had Orla, and we had Silvercrest. And also, I mean, I guess you could map what we were seeing in terms of the volatility with how Silvercrest financing went. So Silvercrest initially had a bought deal that I believe was around 70 to 75 million at a price, I believe it was over $8 or something like that. And they had that all worked out. The market plunged in mid-March. And then the people that were doing the bought deal, the underwriters decided to suspend it, cancel it, which obviously put Silvercrest's issues with respect to financing out of whack. And so they came back to the market and did their own financing, this time non-brokered, and they raised that money, granted at a lower price, but then that got upsized. And I think they were starting at about 70, 75, and then they ended up going to about 100 million. So there is demand there. There's absolutely demand there, and I think it's not only the retail, because these aren't small companies that are getting funded. It's back to institutional equity. I'm hearing a lot about family offices getting into the action, and so yeah, it does seem that with all these financings we've seen of late, since April, there's a lot of generalists coming in.
A lot of the companies you just mentioned, like MAG and Silvercrest, they have top tier assets. But what about the companies that might have tier 2 assets? Do you expect in the second half of this year that they will have easier access to capital?
Yes, I mean, it's been difficult for a lot of these companies to raise money, but what I've seen is on the back of drill holes, like Roscan drills a hole in West Africa, they immediately go and raise 5 million. Free Gold Ventures drills a hole up in Alaska, and they turn around and raise 5 million. So the market is there, and it's not just Eric Sprott. Although he's heavily involved. Last year, what we saw was Eric Sprott being a big part of the financings. This year, there's a lot more people involved that can write big checks being involved. So yes, I think that tier 2 level of companies, yes, is the financing risk is much less right now.
We've also seen in the last week M&A action within the sector. We haven't seen a bigger company coming in and buying a smaller project at a substantial premium, but it's mergers and acquisitions nonetheless. I'd like to get your commentary on SSR Mining merging with Alacer, that miner there in Turkey. What do you think is going on right here?
Well, I mean, like you said, we've seen a few deals, and there was like a flood of deals last Monday, and Alacer Gold and SSR Mining was one of them. Gran Colombia with GoldX and trying to make a bid on Guyana Goldfields. Guyana Goldfields prior with Silvercorp. Shandong Gold, buying TMAC, an underperformer, and Adriatic in the Tethyan belt of Eastern Europe, purchasing Tethyan. So we had all those transactions happening, in a spectrum, producers to exploration companies consolidating. With respect to SSR Mining, I mean, that was the biggest M&A transaction over the last few weeks, combined about $4 billion transaction. And the trend is post Barrick's acquisition of Randgold is for these no premium acquisitions, because the last cycle we saw a lot of high premium acquisitions that ended up being write-downs, that companies are just ending right now in terms of finishing all those write-downs from non-accretive transactions and capital misallocation. So right now, even though people would like to acquire, they're very wary of acquisition for acquisition's sake because of the recent history of write-downs with respect to M&A activity. So if it's a big acquisition, these no premium bids, friendly acquisitions, not a lot of hostile that you have to bring a lot of premium in or a cash component to get the deal done. And what I see about SSR Mining with Alacer is that consolidation in the mid-tier space for relevance. And so to get noticed by these generalists that are coming in that are looking for big companies, very liquid, and potentially, the combination being able to attract those generalists. And so between SSRM and Alacer probably had the issue that it was a single asset company and the asset was in Turkey. The asset is good, generates a lot of free cash flow, but it's only in Turkey. And so what SSRM Mining gives them is a more diversified portfolio. And so they could throw in North America, Marigold project in Nevada, CB in Saskatchewan, and that, and diversify the risk a bit. And so that works very well for Alacer. What works well for SSR Mining is it gives them a significant free cash flowing asset in Turkey. That makes a lot of money, but probably needs more capital to grow, and SSR Mining has the balance sheet. So that combination of balance sheet for SSR Mining with growth, free cash flow generating asset in Turkey, diversification, and then the potential to put that together and potentially eventually do dividends. And the combination is interesting because post combination, SSR Mining divested themselves of Silvercrest, which might have been a potential acquisition for them, but now it looks like they might have more of their capital to be spent organically at their at projects like the one in Turkey.
We'll be right back after this word from our sponsor. Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 20 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. And under what terms would you invest in a company in Turkey? Would it only be through a vehicle like SSR Mining now or Sandstorm, which has a large ownership of the Hot Madan project? I mean, what are your thoughts on Turkey as a jurisdiction?
I mean, Turkey has gotten to be much less secular than it was, and it's gone a little bit more fundamental. It would seem that, if you're working with somebody or investing in a company in Turkey, that the management team or the board, has good connections in Turkey, such that they don't have any issues. I mean, we have another company like Liberty Gold that's got assets in Turkey, and they're divesting themselves of them. Because they've had trouble, permitting in Turkey. With Hot Madan and Sandstorm and Mariana previously, who we owned in the portfolio, is that they've got a really good partner in Turkey. 70% owned by Lydia Madenchelik, that sort of mitigates the risk of being in Turkey. They're the operator. They've got the connections. They're part of a big conglomerate. So, I mean, that's for me, a better way to play Turkey than maybe having somebody go in and grassroots explore there and find something and then have to deal with all the permitting and bureaucracy of Turkey. Turkey, just like a lot of that part of the Tethyan Belt, is very prospective and has generated a lot of high quality assets. The problem, like Alacer had found probably, is that just being in Turkey with no diversification is not helpful, especially in a growing gold price environment, because still a lot of those generalists, I think, don't like a lot of geopolitical risk, and would prefer the Americas or something like that to higher geopolitical risk jurisdictions. So that's something that they needed to be aware of, and I think with the diversification, that's something that they managed to get.
If you're going to invest, Joe, in a single asset producer, after you do your due diligence on the management team, of course, and the project itself, would you mandate for your own portfolio that it would be in a tier 1 jurisdiction then, if we're talking about investing in a single asset producer?
No, because we've seen a lot of single asset producers that have done well in jurisdictions that some people might not like. So when I'm looking at a jurisdiction that I'm not sure about, like you said, a site visit's very helpful, but also I need to see who's building it, where they're getting the funding, who's supporting them. And so my example would be Guatemala and Bluestone Mining, and so or Bluestone Resources is that. Here's a company that's in Guatemala. Not a lot of people like Guatemala. The background of the Escobal, shut down and put on care and maintenance. So you have all that negativity about Guatemala. I went to Guatemala. The infrastructure is pretty good. The Bluestone's got the Cerro Blanco mine that was actually had Goldcorp do a lot of underground development and not even mine it. There's like 4 kilometers of underground development there and a water treatment facility. I mean, it's like 8 to 10 year underground, 8 to 9 grams, very profitable, and it's permitted. But what gets me is that, okay, it's in Guatemala, but now technically and financing wise, do they have the right people? Well, Lundin Group, they own about a third of the company. And one of Lucas Lundin's sons is actually the CEO now. And so I know they have the financing wherewithal. And technically, now they're using a lot of the advisors that built Fruta del Norte into this, another underground mine in a Latin America with G Mining, which did a really good job at Fruta del Norte. They did a really good job with Marion at Newmont. So yeah, that's what sort of gives me a lot of confidence that they want to build it and they're doing the right thing. And also they have a backer with deep pockets that could see them through a lot of the financing issues. And what was nice about what happened was, usually companies try to get the debt component first, and then that way that they can assure the equity holder that, hey, I've got this debt package behind me. But Bluestone ended up doing, the oversized, financing, oversubscribed financing prior to getting the debt worked out for their for the upfront capital to build Cerro Blanco, which I thought was pretty interesting.
Your insights in real time go out to your subscribers, but now that we're about 2 months on the other side of that mid-March crisis and sell-off in the gold and resource stocks, can you share with us how you navigated the last 2 months?
It wasn't easy. Like, it was a lot of how low is this going to go? But, I remember 2008, and I'm not saying that it's similar, everything is similar, but, human behavior is very similar. We like to panic when we don't understand something. And I saw a lot of that in 2008 when I was working for Newmont. And I sort of thought that we might see a V-shaped recovery, especially in precious metals. Base metals would be harder. Just because of that China was being impacted, and China was the biggest consumer of these commodities. So I thought, okay, I'll work on my precious metals, but like we were talking about prior to the interview, you need to sell something to buy something, and so I had some wins with Sandstorm. I took a bit of money off the table on that, and Irving Resources in Japan, though I still own both of them, but I managed to take some of that money and reallocate it and buy some that I thought were very cheap and high quality companies like Mag Silver and Liberty Gold. And so I picked those up, did well on those. I got a quick win on Mag Silver, and then sold that, and then reallocated that money into a ASX listed company with a high grade resource, Bellevue Gold. So I've been trying to manage that, but I haven't sold, the base metal companies that I like Trilogy Metals. I haven't sold that, and I still like the palladium. And so I still got Platinum Group Metals, and I'm waiting for that to come back. And as China comes back, we should see, some of these base metals and, industrial production led metals come back. And I'm still looking for quality and good management teams. And as long as I got that, I'll continue to hold those. And if anything, try to buy more when they dip. But yeah, so that's the way I've been selling. I haven't tried to panic and sell everything and then buy it all back again. I've been more about trying to pick companies that I think are, high quality with good management teams that are very highly undervalued.
When we spoke a few months ago, when you were last on the show, you had about 50% of your resource portfolio in prospect generators. Did that demographic within your portfolio change at all?
Yeah, I mean, I've probably got more now that I've added more explorers and advanced explorers. So I've got more precious metals right now than I did at the beginning of the year. But it's not like I sold a lot of the prospect generators, because right now, what the issue with prospect generators is that when the mining cycle is down and financing is difficult, prospect generators work better because they use other people's money to look for things. And a lot of the prospect generators I've got, are still pretty cheap, and I don't want to sell right now. So I still continue to hold them. They're definitely not what's moving my portfolio up. It's, these other companies that are basically delivering the goods right now, not them. But I think like a lot of these companies, if they hit a hole like Radius hit last year at their Amalia joint venture with Pan American, we could still see more than a double from companies like this. And most of them are funded. The issue right now that we have with a lot of companies is they're funded to do things. They got the asset, but some of them actually can't do the exploration right now because of lockdowns. And that's very true of Peru. That's definitely an issue in Peru, where companies are just sort of sitting on their hands right now, burning through their working capital, waiting for that thing to turn with respect to getting access to their projects.
Joe, this next question is about the precious metals bull market that we're in, that I believe has been confirmed. The first part of the question is, how long do you think this will last, your expectation in terms of years? And the second question is, what is your strategy to profit to the max over the course of this bull market? We hear of the strategy of doing private placements, then stripping the warrants and reallocating that same money into a new private placement, a highly leveraged way to try to make the most while you still have the time in the upward cycle of the bull market. What is your strategy?
Well, doing the private placements are good. The problem is that a lot of our subscribers can't do the private placements, and so I do more in the kit. Because I don't really like the 4-month hold. And so the market is volatile. And if we have an issue like with a single asset company, I'd like to be able to sell it as opposed to being stuck with it. But if we have a market where we're seeing all these marginal assets, companies with marginal assets being able to attract money, the market is turning with respect to, now we're seeing not quality actually getting funded, but now we're seeing assets that, quote unquote, offer leverage to the gold price getting funded. But a lot of those assets probably should never be built.
And what is your expectation in terms of years for how long this bull market will go on?
I mean, it's going to be volatile. I mean, the underlying issue is the amount of, money that's being, put out there with respect to the central banks, the defacement of the currencies. And we're still going to feel the effects of that for a few years at least, and we're probably not done, as the U.S. Federal Reserve was talking about in terms of supporting the U.S. economy. So in terms of that, yes, gold has got a few years to go. I'm not saying it's not going to be volatile in the interim. I'm actually hoping it is, because then there's more of an opportunity to pick up these stocks that I like at a better price. Right now, I mean, we're still waiting for, we saw the gold to silver ratio, as high as 127 at one point, and now it's gone down below 100. And so the one that we have the silver exposure to, like Pan American Silver, has done quite well in that environment. And so that silver push as well is something that I'm looking at.
Yeah, I've been able to benefit from that rise in silver, as I'm heavily weighted in silver juniors, so I've appreciated that. As we look to the second half of this year and even the summer, as we bring this conversation to a close, what final advice would you leave with the resource investors that are listening to us?
Well, I mean, I would, like, for me, in the portfolio, and because I write a newsletter, I'm always concerned about, the volatility with respect to the individual management teams, especially when you're buying a junior, non-cash flowing explorer. Management is still important. The asset is important. What can they do? Are they funded to do it? And some companies are funded, but if you're looking for something to happen in the next 6 to 12 months, you got to worry or concern yourself with, can they actually spend that money? Do they have people there to actually drill the holes or do the work? And I've noticed that about the, not just the supply chain, as people want to get things that are closer to their assets, with respect to cyanide, with respect to building things, as opposed to ordering everything from China. But they're also like manpower, like people that have a lot of expats that fly to the asset to work on it. They're basically shut down. But people who have more people locally to work on those projects and can access them, they continue to work. And so I think that's going to change going forward. And you almost have to dig into the companies in a bit more detail to find out if, even if they're funded and you like the asset, you like the management team. Another thing is, can they actually deliver these catalysts? Can they actually work these assets? And so that's something else that I'm thinking about. I mean, I might pick up a company with a long-term view and not be worried about that. But if you're looking for a short-term gain going into the summer, thinking about the field season, and then you find out that they can't actually work yet. That's something you want to think about.
Joe's website again is explorationinsights.com. There's educational resources there, and if you're interested in Joe's real-time insights and companies that he invests in, go ahead and sign up for his newsletter. There's more information at his websites. Joe, as always, I appreciate your insights, and thanks for coming on today's show with me.
No worries. Thanks for the invite, Bill.